Hello and welcome to your 401k plan enrollment meeting. Your plan is offered to you through your employer by the retirement plan company. Today we will review the plan highlights, then we'll get into the investment options available to you in this plan, followed by the easy enrollment instructions to get you enrolled into the 401k plan. What is a 401k plan? A 401k plan is a section of the Internal Revenue Code 401k. It is an employer-sponsored retirement plan that allows you to contribute via payroll deduction. And the contributions that you put into the plan out of your own paycheck will grow tax deferred. You should have received a plan highlight sheet from your employer. This will lay out the eligibility criteria of when you can enroll into the 401k, as well as the entry dates of when you can start contributing to the plan. For 2022, there are multiple money sources that you can contribute to called employee 401k salary deferral contributions. The first one is the traditional pre-tax contributions. These contributions are not taxed when contributed. They are taxed once you take the money out of the plan. The other salary deferral contribution type is a Roth post-tax employee contribution. These contributions are taxed up front when you contribute them, but the withdrawals are not taxed at all. So the earnings portion of a Roth post-tax contribution is tax-free. This is a way of locking in your current income tax rate. For 2022, the combined contribution limit for your employee salary deferrals between traditional and Roth post-tax contributions is $20,500 if you're under the age of 50 by the end of the year, and $27,000 if you are age 50 or older by the end of 2022. You'll want to review your plan highlight sheet for the employer contribution portion of the plan. Some plans will offer an employer matching program. Others will also offer a profit sharing program. Please refer to the plan highlight sheet for the specifics for your plan. You will also notice that there is what's called a vesting schedule. Vesting means ownership of the contributions that are in the plan. Please note that employee salary deferrals are always 100% immediately vested. If there are employer matching or profit sharing contributions put into the plan on your behalf by your employer, they may have a specific vesting schedule. And that means that the longer you work for the company, the more of the employer contribution you will technically own. We discussed putting money into the plan. Now let's discuss how you can take money out of the plan. First, we have an in-service withdrawal option. Once you're age 59 and a half or older, you can start taking money out of the plan, and there is no early withdrawal penalty of 10%. That will be waived. However, you will pay ordinary income taxes on the withdrawal that you take. The second option is a hardship withdrawal. This is mandated by the IRS. So you can take money out of the plan regardless of your age for specific hardship reasons. Examples of a hardship would be paying for unreimbursed medical expenses, paying for a down payment on your primary residence, paying for post-secondary education for you or your dependents, paying for funeral expenses, and other hardship reasons. With a hardship withdrawal, you'll pay ordinary income taxes and an early withdrawal penalty of 10% if you are not age 59 and a half or older. The last option is the end of employment withdrawal. When you leave your company, you are eligible to take your 401k with you. You can take it and roll it into an IRA, individual retirement account, or you can roll it over into your employer's retirement plan if they offer one to you. The rollover option allows you to continue the pre-tax benefit. So therefore you will not pay ordinary income taxes with a rollover. However, the last option is the cash out option. While you do have the option to cash out your money from the 401k when you leave the company, the cash out will incur ordinary income taxes and an early withdrawal penalty of 10% if you are not age 59 and a half or older. We've talked about putting money into the plan, taking money out of the plan, and now we're going to talk about what to do with the money while it's in the plan. There are three basic options with the 401k. The first is the default fund. The default option is a target retirement fund based on the target year that you plan to retire. So if you want to be completely hands-off, then you can default your contributions into a target retirement fund. These are actively managed portfolios based on the year that you would plan to retire. They will become more conservative as it gets closer to that target retirement year. The second option is a model portfolio. If you would like some assistance in picking the investment options available to you, you can answer a series of risk tolerance questions on our website as you're going through the enrollment process. And with that information, it will provide you with a model portfolio recommendation based on the type of investor that you are. And the third option is choosing from our core mutual fund menu. You can create your own custom allocation from that menu of mutual funds available. Next, how to enroll in the plan. You will enroll online by going to our website at trpc401k.com. The first time you log into your account, click New User in the top left corner of the box. Then you will request user ID and password, and then enter your social security number, date of birth, zip code, and click Next. Once logged in, answer 3 security questions and change your user ID and password. Enter your email address and/or your phone number, and we'll send you a one-time PIN for security purposes. From there, you are ready to begin the actual enrollment process through a program called iJoin. So you'll see the iJoin Goal-Based Retirement Income screen and click Next. Now you are ready to go through the 3-step process to enroll in the plan. First, choose your investments. Notice on the left side of the screen you have 3 options: Choose for me, Help me choose, or Choose myself. Choose for me would be the default fund that we discussed earlier. Help me choose would be completing a risk tolerance questionnaire, and we will provide a model portfolio recommendation for you based on the type of investor that you are. Third, Choose myself. This is where you can choose your own investment options from the core mutual fund menu. Then, determine your contribution rate. This is where you will decide how much money you would like to come out of your paycheck each pay period. Notice on the far right bottom side of the screen, you can select pre-tax contributions and/or post-tax Roth contributions. Also, you can toggle to the left or right to decide if you would like a percentage of pay or a fixed dollar amount to come out each pay period. In this example, $462 is the amount that would come out of the employee's paycheck every pay period. The 84% of goal, this is showing you the likelihood that you will reach your retirement goals based on the contribution rate. You can dial up or down to see if that will impact your projected income goal at retirement. Finally, you will select your beneficiaries. You can select up to 4 primary beneficiaries and up to 5 contingent beneficiaries. Please note that a contingent beneficiary would be the individual to receive your 401k benefits if something happened to you and your primary beneficiaries. Then you will confirm your enrollment selections, click Agree, and then Authorize. You have a number of resources available to you at the retirement plan company. Access to these resources will be at your fingertips through your participant account, again at trpc401k.com. From here, you will be able to change your deferral amounts, change your investment options, and request distributions. If you have any questions pertaining to your 401k account, you may also give us a call at 888-673-5440. Thank you for your time, and we look forward to getting you enrolled into your 401k plan.